Hey, yo, what's groovy? Welcome to What Happened News Weekend Edition. Hey, Weekend Edition for What Happened News. Same great show, except for on Weekend Editions, we're going to focus on one topic. We're going to talk about one thing. And today, the thing we're going to talk about is redlining. Now, I know what you're thinking. Hey, man, ain't that some like black history shit? Some shit from a long time ago? You would think, but nah. Unfortunately, redlining still happening right now. Check this out.
When I read this article this morning, I had to look at my calendar. A redlining lawsuit and settlement in 2023. Ameris Bank has $25 billion in assets and operates in 9 states across the Southeast and Mid-Atlantic. So according to the DOJ, Ameris Bank avoided providing mortgage services to majority Black and Hispanic neighborhoods in Jacksonville, Florida from 2016 to 2021. Let's keep reading. Their focus, Ameris Home Mortgage Lending, was focused disproportionately on white areas of Jacksonville, while other lenders generated applications in majority Black and Hispanic neighborhoods at 3 times the rate. Ameris Bank also didn't have any branches in Black and brown neighborhoods. And part of the $9 million settlement, they're going to have to put a branch in a Black and brown neighborhood, and they're going to have to put programs in place and all kinds of stuff to try to say they're sorry. So next time someone tells you to just get over it, that was in the past, racism doesn't exist, pull yourself up by your bootstraps, show them this video.
But wait, there's more.
So I think most people, when they hear the term redlining, certainly their mind goes back to a practice that happened decades ago. Banks would not lend to, Black and Hispanic neighborhoods. We think that ended decades ago. Nope. The Justice Department just fined City National $31 million because they were refusing to lend money to people who wanted to buy in predominantly Black and Hispanic neighborhoods in the city of Los Angeles. So first of all, I had no idea the Biden administration had put together a task force specifically to look for banks who were discriminating against minorities. So that is huge. And what they found is that this bank, when they looked at this bank versus all the other banks that lend in the state of California, they underwrote basically 0 loans compared to all the other competitors in certain neighborhoods. So it was easy for them to be found. City National released a statement saying that it disagreed with the Department of Justice allegations, but nonetheless support the DOJ in its efforts to ensure equal access to credit for all consumers regardless of race. Yeah, right. But as part of the settlement, they will have to create a $29.5 million subsidy fund for loans to go directly to Black and Latino borrowers, and then spend an additional $1.75 on advertising, community outreach, financial education programs, and whatnot. See, you tried it and you didn't get it.
Now that I got you up to date, that is still jumping off. For those of you who might not be as familiar with redlining, here's a quick refresher.
Home value disparities can be traced back to the time of redlining. In the 1930s, the federal government created a program in support of white middle-class families. While suburbs were created for white families, African American and people of color were pushed to urban housing projects. Maps categorized city neighborhoods into 4 grades. Grade A and B, green and blue, were considered the most desirable and contained all white populations. These homes continued to grow in value. Grade C and D neighborhoods were on the decline, considered hazardous or undesirable. These homes did not grow in value and contained African American and Jewish populations. Those living in grade C and D were denied mortgages or prohibited from moving into grade A or B neighborhoods. This helps to explain how whites acquire generational wealth to pass down.
Now, redlining is problematic both because it prevents Black people from buying property now. It also is catastrophic to generational wealth, or the opportunity for generational wealth. Part of the legacy of successful Black cities being destroyed, like Rosewood or the Red Summer here in Chicago, Illinois, or the Black Wall Street in Tulsa, Oklahoma. By the way, there's literally dozens, if not hundreds, of those stories of successful Black towns that were destroyed. There's a town in outside Atlanta in Georgia that they buried, they built a lake over a fucking town. They Wall Street. America is littered with the graveyards of Black communities, thriving Black communities that were systematically either engineered to be destroyed by public works or literally just burned to the ground by angry white mobs. Anyway, so when white supremacists marauding as, just question asking curious philosophers, fuckheads, ask the question, well, what's going on with the Black community? Why can't you guys just seem to pull yourselves up and and get yourselves together? It's not because there's some flaw or some inherent flaw in the black community. It's because the banks don't allow it. The banks don't invest. Along with redlining, keeping black communities poor and keeping poor people and black. Let me give you an example of something that they don't take into account. My personal story. My mother worked in a factory, but she worked in a factory that paid a pretty decent wage, exceptional wage. She made just shy of six figures most of the 80s. And if you know anything about the economy in the United States of America, a single person making just shy of six figures, and a person making just shy of six figures right now is doing okay. She was doing that in the 80s. We lived in the same neighborhood as people who were on Section 8 because that's where they allowed her to buy a house. Now, she managed to do better later on and she moved to much nicer neighborhoods. But for a large section, most of my youth growing up, we grew up in a neighborhood that was like our socioeconomic situation didn't match the community that we lived in. I love my neighborhood. I still represent that neighborhood. I have a ton of pride of the neighborhood I grew up. I don't want to take this to anybody from my neighborhood thinking like I'm shitting on my hood or nothing like that. But I know people who my mom worked with who happen to be Caucasian who lived in much nicer neighborhoods. And it wasn't because my mom didn't know how to pay care of it. We had a mortgage. She paid her bills. She's bought multiple homes in her life. She has good credit. She has money. Why y'all think she didn't live in those neighborhoods? Y'all want to take a guess? Y'all put it together. By confining successful or more affluent blacks to lower income neighborhoods, their the ability to own more valuable property was held back. Also, the ability to make the property that they own in the socioeconomically challenged neighborhoods that they lived in. They couldn't even build that neighborhood up because no matter what they did, the banks wouldn't recognize the appraised value of the property. So, or wouldn't raise the appraised value of the property. They wouldn't see the value in the property until white people wanted to move there, and then that's when gentrification kicks in. But that's like a whole nother thing. We're just talking about the redlining part today. Oh, by the way, I know my story about my mom seems kind of anecdotal, so you might think, yeah, XL, that's sad about your mom or whatever. You guys couldn't get a nicer neighborhood, but that's just you guys. Well, actually, I grew up with dozens of black friends whose families worked at facilities that paid wages as much, if not more than what my mom made, who lived in the same neighborhood. We all lived in a neighborhood that was substantially less than what our parents could afford to buy. And it wasn't because our parents didn't want to live in nicer neighborhoods. It wasn't because we didn't want to live in bigger houses. It's because the banks would not give them loans for bigger houses. They would only give them loans to live in the neighborhood that we lived in.
Owners Paul Austin and Tanisha Tate Austin knew it was worth at least $1.3 million based on a 2019 appraisal. But looking to borrow as the housing market heated up, Paul met a new appraiser and showed her around.
And what was the number value? You open up that piece of paper and what is it?
Oh, $998,000.
Less than $1 million.
Less than $1 million.
Which means almost $400,000 less than the appraisal you'd gotten a year earlier.
Yes.
And so they applied for a new appraisal, but this time,
I'm going to guarantee that I'm going to get the appraisal that my house is supposed to get.
And in the United States, what is your best guarantee of getting the best rate possible?
Being white.
Being white.
So they worked to erase themselves from their own home.
All of our art, took that away, pictures of our family, anything that, would resemble that this home belongs to a black family. Just grabbed it all, put it all in a shed, put it all away.
And they asked a white friend to stand in when the new appraiser arrived.
So this time you open the paper and it says what?
1.482.
Yes. $500,000 difference.
And part of the legacy of all of this is that not only are black neighborhoods appraised at lower value, but banking institutions don't put facilities in those neighborhoods. If you notice, there's check cashing places and currency exchanges in black neighborhoods. You rarely actually see a bank branch. And the reason why you don't see bank branches often is because banks are required to lend within a specific radius of every branch that they have. So I forgot, excuse me for not doing the research on this. I don't know the exact number while I'm saying this. I'll have the team, can you get it for me? You got it? Thank you. Banks are required to lend to businesses and homes within a specific radius. It's called compliance. And if they're out of compliance, the bank is fined substantially by the Fed until they get into compliance. So the way that banks avoid lending money to black neighborhoods to help black neighborhoods improve by helping black business owners and black homeowners improve their neighborhoods is they just don't put branches in those neighborhoods. So then they don't have to lend to black people because there's no branches in black neighborhoods. And then if you segregate the neighborhoods, then you don't have to lend to black people. Tricky.
A lot of people cite redlining as one of the reasons why Black people deserve reparations. So let me read a little bit from The Case for Reparations by Ta-Nehisi Coates to explain how redlining works and how the federal government conspired to keep Black people out of home ownership. 3 months after Clyde Ross moved into his house, the boiler blew out. This would normally be a homeowner's responsibility, but in fact, Ross was not really a homeowner. His payments were made to the seller, not the bank. And Ross had not signed a normal mortgage. He bought on contract, a predatory agreement that combined all the responsibilities of home ownership with the disadvantages of renting, while offering the benefits of neither. Ross had bought his house for $27,500. The seller, not the previous homeowner, but a new kind of middleman, had bought it for only $12,000, 6 months before selling it to Ross. In a contract sale, the seller kept the deed until the contract was paid in full. And unlike with a normal mortgage, Ross would acquire no equity in the meantime. If he missed a single payment, he would immediately forfeit. He would forfeit his $1,000 down payment, all his monthly payments, and the property itself. The men who peddled the contracts in North Lawndale would sell homes at inflated prices and then evict families who could not pay, taking their down payment and their monthly installments as profit. Then they'd bring in another Black family, rinse and repeat. He loads them up with payments they can't meet, an office secretary told the Chicago Daily News of her boss, the speculator, Lou Fuchanis, in 1963. Then he takes the property away from them. He sold some of the buildings 3 or 4 times. Ross had tried to get a legitimate mortgage in another neighborhood, but was told by a loan officer that there was no financing available. The truth was that there was no financing for people like Clyde Ross. From the 1930s through the 1960s, Black people across the country were largely cut out of the legitimate home mortgage market through means both legal and extra-legal. Chicago whites employed every measure from restrictive covenants to bombings to keep their neighborhoods segregated. He goes on to talk about how redlining worked with the FHA, which adopted a system of maps that rated neighborhoods according to their perceived stability. On maps, green areas rated A indicated in-demand neighborhoods that, as one appraiser put it, lacked a single foreigner or Negro. These neighborhoods were considered excellent prospects for insurance. Neighborhoods where Black people lived were rated D and were usually considered ineligible for FHA backing. So that American dream was often federally kept out of the hands of Black people. Just one of the reasons why we deserve reparations. Read The Case for Reparations at your local library or subscribe to The Atlantic.
Hey, thank you for checking out the first weekend edition of What Had Happened News. Please continue. Our views keep going up on the YouTube page. We appreciate you all so much. Thank you so much for checking us out. Please continue to like us, to share us, to snap us, to follow us, to retweet us, to do all the things that you got to do to keep us, growing. You know how this works.